Hi, guess what? It's time to do option trading. For those of you guys don't have a lot of money and you still and some of you guys may think, well, I have to have at least $1,000 in my account for me to trade. But I'm going to show you if you have money that are like maybe less than $500 in your account. So pretend that I have like $350 in my option buying power here. Okay, here's option buying power. And obviously, I have $253,995.60, but we're just going to only work with $350. So first of all, you have to find a company that is low enough that you could at least do one contract. Okay, so I did some research and I think I'm going to go with the GM. Right now the Merck is $89.88. That's a little more than I could afford to do option trading, setting up my options. That is less than $350. So I'll choose GM. It's only $32.99 per share. So what I do is, first of all, I'm going to check my market watch and just to see what kind of market it is today. Some of you guys may look at this market and say, well, you know what? It's a mixture of, bearish and bullish market. That is correct. If it's a bearish, it's all red throughout the whole chart here. And if it's a bullish, it would all be green. But there's, I would say, 50-50. So the way how you look at the chart, it's not wrong unless if this is all red and then you say, well, it's a bullish, because it isn't. Red means bearish. It's a down market. And then if it's all green, you say, well, it's a bearish. And that is incorrect because, if it's green, it's a bullish market, it's an uptrend. So just kind of wanted to make sure that you guys know how to read the chart. All right, so let's look at GM, for example. And I only have, pretend, like I said, I only have $350 on my option buying power, okay? Don't pay attention to this, but just strictly $350, which is less than 500, obviously. And I will set up an option trading, just doing a one single leg strategy. And I'm going to decide what kind of options I'm going to set up, whether it's a up or down trade. So what I'll do is I'll look at the 1 day movement here. And you noticed how I just switch this link to red color. And it just pulls up the GM. Instead of typing it in GM, you could just link the color coordinations there. And I'm going to change that into 5 day, 5 minutes. And again, link that to red color. It says 1 year, so you could change that coming to the area where it says a D for day. And you could change that to 10 minutes, 30 minutes. 10 days and 30-minute chart. And again, link here and go to 20-day chart here. And 1 hour. 20-day and 1 hour movement. And all these are the indicators. It's a candlestick. It shows the movement, how the market has been moving up and down, up and down. So you could see by looking at the chart, if you were to look at the 1 day movement, you say, well, it's $32.99 is the current market. It's close to 33, so I wouldn't want to do up trade. You would not want to set up a chart and hoping that you would make money as the market one goes up. But some of you may say, you know what? I think there's opportunity that it could go up to 33.51. And then some of you guys look at this 5-day movement, you'll say, definitely it's up there towards the ceiling, and the lowest market is 30.65 towards the floor. So I think I'm going to set up a down trade. So it's not wrong how you read your chart. It's not wrong way, because everybody looks at things different. That's what makes us special, because we're all different. We think different. We have different opinions and things like that. Now, so if you were to look at 10-day movement and you'll say, well, you know, definitely towards the down market is towards the floor here. So I think I'm going to definitely set up an up trade, because, you know, 32.99 is close to 33, and the highest market it's gone up to was 38.77. So 33 to 38, that's definitely, you know, $5.70 movement right there. And then you look at your 20-day movement, and again, current market here is 33, which also indicates on this side right here, 33, 33, 33. These are all same as current market. Okay, that's what it indicates on the side. And you'll say, well, definitely, if I was to look at the 20-day movement, it has to go up, because it's down towards the floor here. Okay, so again, it's not wrong, it's just a different. But you have to kind of know by looking at it, by studying the chart, and say, okay, what do I want to do? So if you just pull up like 1-day movement in here, which is like you don't want to do, because when you look at this 1-day movement, like, well, you know what, I don't know, because it's kind of in the middle, because the lowest market has gone down to 31.69 and the highest is 33, and this is 32.99. Again, this is more closer to 33, and it's only like 51 cents. So somebody will say, definitely, I'm going to do a down market. You know, set up my options to make money as the market is going down. Now, we're just going to kind of look at the more closely here. So now you could change this to like, well, let's look at 5-day movement. So when I showed you looking at the multiple chart all at once, you could kind of see. But if you were to focus and just look at it like a 1-day or 5-day chart, just one chart at a time, then you could see again 32.99 close to 33, and then 33.51, and you would definitely want to do setting up a down market. We don't need to go there. I keep wanting to go to the multiple chart, but you don't have to. So you could go 10-day. See how you could save so much time just looking at all 4 charts at the same time, instead of going through this one, you know, chart for like 1-day, 5-day, and 10-day. So you look at the 10-day movement, 33.04. Well, it's like $3 difference here, but then there's a $5 difference between 33 and 38 here. So again, some of you guys may want to say, you know what, I may want to do a down market, because it could probably go down towards, you know, close to $30.65. Or some of you guys may say, you know what, you'll definitely go up. So you'll do an up trade. That's how you look at it. Now we're going to look at 20-day. The reason I like to look at the 20-day movement is because, you know, I'm going to use an analogy when I used to work for a doctor. So when I used to work for dermatologists, and patient would come in and they want to get their cancers removed, and the doctor always used to say, you know what, the cancer is like, just pretend like this is a cancer spot right here, 4027. It's kind of different, right? But we have to excise, take out the cancers, not just right in here within this white line 4027, but we have to go outside of a little bit, so that we'll have to get to a good skin to know that we got all the cancel spots out. So same thing here. If I wanted to do it like a 1 or 5 or 10-day movement, I want to make sure that, 20-day market has not gone below 3065 were indicated by looking at the multiple chart. Again, this is just kind of way cool to link your color coordinations to save you a lot of time. And it doesn't have to be like, I had it where 1-day movement here and 5-day and 10-day, 20-day. You could just do whatever. So it's 20-day. Maybe I just want to do a 5-day, whatever. It doesn't matter, but I just kind of like to put them in order. So either 20, 10, and then 5, and then 1. You don't have to do it my way. As long as you pay close attention to how you look at your chart is the important part. All right, so again, because I'm going to be doing like a 10-day trade, and I want to make sure that within, further out from the 10 days, I want to make sure that 3065 within 20-day movement is not gone down to like maybe 20 or 15, right? Because if that's the case, it's going to help me to decide there's a possibility that it could go down below 30 even on the 10-day movement. So to identify consistency of 3065 on 20-day movement as lowest, and 3065 on 10-day, and 3065 on 5-day. And looking at the 1-day movement, it's gone up a little bit right here, like $1 or so. Because there's 3065 and 3169, so $1.04 right there. But that's okay, but just identifying the consistency here. So that's good. So I like this. So what I'll do then is I will set up a trade, okay? Let's just say, again, I only have $350 that I could work with. So if I want to do a down trade, right, hoping to make money as the market is going down, then what I'm going to do is I'm going to go on the put side. And just look at this. See this, look at the numbers as under this bid and ask. What these numbers are is the premiums that we are paying to get into a trade. Like, in other words, if I'm going to choose a strike price of like 32, then I will be paying $1.15 per contract per one quantity for me to set up my single leg strategy here. So that's what it means. So right away, you could look at it and say, okay, I only have a $350 that I'm working with. So then you know to go with the premiums that is less than $350. Now right here is $345. You got $5 extra, but you always want to make sure that you have enough money to include your commission. Okay, so if you're doing a one contract, it's going to only cost you like 65 cents, 66 cents or so. So I will choose like 345 premium, which is 36 strike price. And see, let's see what happens. Okay, so let's just strike price of 36. I'm going to choose, I could choose here, but 350, so you got to choose that or this number, right? So I could choose right in here, and then I could do 2 contracts. Okay, that's what I mean. So you could do that. So you figure 350, so $1.50, $1.50 is what, 300. So I might be okay to choose this strike price of 32.50. Just single leg strategist out of the money and choose it. And I'm going to analyze it. So I will right click in this area. Now this is pretend that I'm going to be making money as the market is going down. Okay? And I'll show you the both ways versus the market is going up and how you could set up. So right click on the green area here and analyze trade. Now you noticed I have multiple things clicked. So I just will X this out because it says not traded. And these are the old trades that I set up and I saved. So you could just X out. So right now, you just have a one single leg strategy here. And so I always like to make sure that I click all. In this case, it doesn't matter because you only have a one single leg strategy. But I always like to unclick because a lot of times I have a multiple different trades here. I have a vertical, single, and stocks. So just unclick all, get into a habit of that, and just click the one that I want to look at. So this is a 10 contract. Obviously, it's going to cost me $1.35 times 10. And instead of $135, it's going to be a lot of money, more than $350. So I will just take it down to one contract. And to analyze, all right, so right in here how this red line here, pay attention to 6/21, that's today's date, and 7/16 is the day that my option is going to expire. Okay, so pay attention to the numbers, it changes, right? So this is a down trade. So when my line, my finger is pointing going towards, like, because all these are market prices, 29, 30, 31, 32. So obviously when I go towards down the lower market here at 31, right there, right? You noticed how it says there's a red line here. That's like a break even right there. So 31.13 or below, I'm going to be making money as the market goes down. So that's how you analyze it. Now let's just see right from here. You don't have to get out. You could just go right from any green area here, right click, and you could look at confirm and send and see what's going to happen. So right now, GM is 33.08 and break even is 31.15. So it has to go down $2, right? 33 to 31.15 is the break even. So it has to go down $2. So 31.15 or below, you're going to be making money. So if that happens, then your max profit, you can make $3,115, and it's only going to cost you $135.65, including 65 cents of commission. Now, you could go to edit, and let's see what happens. With the commission, if you were to do a 2 contract, right? You should still have enough money here because it's only going to cost you $271.30. And look at max profit is $6,230. Wow. Let's see. So 271. So you figure 350 is all we have to use on option buying power. Again, we're just working with $350. And minus 271.30, including the commission, will be 6. Okay. So it'll leave you with $36.70. So you could only do 2 contracts. And that's pretty good. Now, you could say, I could send it, or I could save it, or I could just edit, or I could delete. So when I delete, this trade's going to go away. If I edit, then I could just, just like anything else, you edit your videos or edit whatever it is. same thing. You could just come to this by editing, clicking the edit button. You could just change whatever you want to do. Now, I like to do my break even closer to current market because I want to know how much of movement is there in 1 day movement or even 5 day movement. Okay, so we know the break even is 31.15. Now you have to write this number down because I'm not a math whiz where I'm going to remember all the numbers. So I just take a scratch pad and write down my break even number is 31.15. I write that. And then I'll put down 33.05. This market is changing. Current market changes because this market is open, obviously. So 33.03. So you take 33.03 minus 31.15 and you figure, okay, so $1.88. So there has to be $1.88 or so movement before you even have a chance to make money. Again, this has to be 31.15 or below to make money because this is down market. So then we look at the chart and say, is there been a $1.88 movement anywhere between 10 day or 5 day movement? Yeah, there is. Look at this 10 day movement again. This is how many day trade we decided. Okay, July 15th, that's like 23 day options. Like it's not going to expire until 15th of July. So in 23 days, and where we've seen the chart of definitely $1.88 movement between, the current market, which is 33.02, and the highest market, 38.77. That's 10 day. And a 20 day movement, there's definitely, 33 current market to 40. If you were to compare from 30 to 65, which is the lowest market, to 40, that's like $10. But definitely there is more than a $1.88 movement in 20 day. And we're doing a 23 day chart. So that's how you look at the chart and decide that there's enough movement. Now, if there isn't a movement of difference of $1.88, you don't think that it's going to go down, right? So you could say, all right, well, we'll look at the up market right now, right? But we want to look at the down market here. So again, because this is a down trade, we want to be able to, compare from the lowest market to 33. So there's a $3 movement within 10 days. Okay. And within 20 day chart, again, there's a $3 difference here. And we only need a $1.88 movement between the break even and the current market there. All right. So that's how you look at it and decide whether you want to do down or up market. So you're safe to do a down market. Now, at the beginning of this GM, when I was looking at it earlier, the current market was $32.99 and it moved up to 33. And so if you were to do a down market, obviously, you're going to be losing money right away, right? The reason is because it is above current break even. 31.15 is break even, and it's 32.95 is the current market. So you're going to be losing money. Now let's just say I'm going to delete this, or I could save it, right? For the downtrend, I could save this. So that's huge. Like, who could make $6,230 in 23 days without driving to your workplace, wasting your gas, especially when the gas price is so high nowadays, and just click of a button? Usually it takes me only 2 minutes to do it, but because I'm doing a video and analyzing with you guys, that's why it's taking me a little bit longer. But I don't want to rush through this video because some of you guys may get confused. So I'm going to save this. Now, so see all these trades that I have saved here, right? I have a vertical on Delta that's expiring on the 24th of June, and I saved that. And this is one I just saved, expiring on the 15th of July on the GM, on the single put. I saved that. This one, I saved it, but it's, it's past April 14th. And so you could just leave it or you could just delete it. And this one is like way from Oxy. So this, you could just cancel this out. Okay. Now, if I was to do a up trade on the GM, because like I said, some of you guys may want to do a down trade or some of you guys may want to do an up trade. So if I was to do a up trade, again, we're going to work with pretend $350 on my option buying power. And you can look at it right away. Here's all the strike prices for either puts or the calls. And these are the expiry date. And you could change this to any day you want. You could change to expiring next Friday, which is July 1st, or 2 weeks from now, whichever day that you want to decide. Yeah, so you could look at right away. You got $350. So you could go, the most premiums that you could afford to pay is $330, right? Because $3.30 times by 1 is $330. So that means you have to choose 30.50 strike price, and you just go to the call side, right? But that's in the money. So try like not to choose the strike prices in the money. And if you choose somewhere like in here, chances are, even though you've chosen strike price is 32.50, it's in the money right now, you may be out of the money. Or it could stay in the money because depends on what the market is doing. So you could just, like I said, if you don't have, a lot of money, you could only spend $350, then it just kind of lets you know, looking at it right away, instead of picking up a strike price and then, it's like doing something like this, for example, like, if you didn't pay attention and you go, I got $350, I think I'm going to just set this up and just go like this. And again, you want to make sure it's not a 10 contract and just even one. I know right off the bat that I can afford to do this because $3.70 times 1 is $370. So I can't choose 30 strike price. So what I'll do is I'll look at this and say, okay, 330, 30.50, or you could go with like a 32 or 32.50 or 32. So if you were to choose that, you could probably do 2 contracts. Why? Because 224 times 1 is $224 times 2 is what? $448. Is it 440? Oh, then we can't do 2 contracts because you only have a 350. So it's okay. So it's going to cost you $224.65 with the 65 cents of commission. And the max profit is infinite, which is not a bad thing to have. Sometimes we like to know the actual max profit that we can make, but this means you can make, infinite. 34.24 or above. So in other words, right now it's sitting at 33.02, 34.24. That's about $1.22 movements. And this is what? 23-day movement. Would you looked at a chart and say, yes, definitely it could go up and down within, $1.20 or so. So this might be a good trade. Now, we're going to analyze this, right? So we will go into this green area, right click, and analyze trade. And again, you pay attention. So as my finger and pointer goes up towards this, the market price is higher. It's like 29, 30, 31, 32. This is all market prices here. So if I was to go up, right, and you could just see right here, you don't have to go like this, but just come at the break-even number right in here. So if your market is at 34.26, or right there, say 34.24 or above, you'll make money. So right at the red line, break-even number, it shows 48 cents. Right, so as the market moves up, you're going to make money. So pay attention to 716 right in here, this number, right? It's going to, so if it goes up to like 35, 36, I'll be making 194 or 191. Again, this market is moving because it's alive. 36.70, and I'll make $247. So that's how you could see. So you could analyze that. Again, you could come back here and, or you could just go straight to confirm and send. Right there. So 34.23, and there's 32.98. And infinite and max loss is 223. So you could always save this trade, or you could just send it through. However you want to do it. That's all I wanted to share today. I hope you guys have a wonderful day and happy trading. And follow me on my YouTube, all my social media. I'm on LinkedIn, Facebook. I have 2 Facebook pages, one for personal, and then 2 Facebook pages for business. Unique Miracle System, and also International Entrepreneur Movement Group. And then I'm also on the Instagram, Twitter. You could also schedule an appointment with me to have a consultation through Calendly. So feel free to look me up, contact, I don't bite, so contact me. I will teach you a lot of good secrets how you can make money and let money slave away for you. So you could go on vacations and you could enjoy relaxing and let the money slave away instead of you slaving away for the money. We need to change our mindset. We need to take actions. We need to learn to invest and diversify. But first of all, if you don't have money to invest and diversify, well, you can make money doing options. So get connected with me. See you later.